What's up, everybody? This is Jimmy with Trade Decoded. It is June 26, 2024, 4:09 in the afternoon. And yeah, we had a pretty good first half of the day. A couple of aggressive trades, but three very, very clean, very big paying trades a little bit later in the morning. And then the chart turned to total garbage until 350. And if you guys watched my video yesterday, maybe you're starting to keep track of how often that 350 candle dictates which way we are going to head into the close. It's not a good enough win rate to justify trading it every time, but it is fun to watch. Now, today's move ran huge to the upside. ADD sparked massive buying at the time. SPY got pulled up because Qs and everybody else started to break resistances and moved up until it hit the red box of death, which you're about to see what we were referring to, because it was the reason that we took many of our calls, profits at this level, and considered buying puts at this level on the Qs. But let's go ahead and launch charts and see what we did this morning. So this morning's pre-market was downtrending. We had a massive gap up between last night's after hours and this morning's pre-market, and we quickly came down. We would have opened, if the market opened at 4 o'clock in the morning, we would have opened with a gap below us, which was yesterday's high of day at 545.20. We got down to it and below it. Okay, so we opened up in between yesterday's trading range, leaving us with no gap to worry about, and really no reports to worry about either. But we started to trend down. Actually, from 4 o'clock this morning, we did nothing but trended down all the way into the open. Before the open, we do every day calls and supports, or call scenarios and put scenarios. Now, the problem with the put scenario today, as is every day, is that you don't want to buy puts if Qs are on supports. Now, as always, there are caveats to this, okay? When you are playing super aggressive morning trades, you haven't yet given the market any time, at least what we're looking at, to tell you whether ADD is going to dictate which way SPY is going or the Qs are going to dictate which SPY is going, okay? Usually the Qs win that battle eventually, but there are times, today is one of those times, where ADD briefly held the torch. And what I mean is ADD was dictating where SPY was going to go and going. All right. Didn't last long though, because at open this morning, Qs started an uptrend, whereas ADD printed one of the biggest single red candles I've seen in a long time on the opening candle. This is what sparked not just mine, but many other folks' entry into puts on the opening candle. I'll explain this in just a second. We talked about the idea of doing this even before the market opened, before ADD printed a red candle, because pre-market had showed us that we were in a channel. I don't know if you could see this or not, but this is where the call or the put scenario line was coming from, but with caveats. Guys, we're bouncing between resistance at 543.69 and support at 543.32. Okay, that's about a 40-cent range. That is a playable range. That will pay you 20% or better on a trade if you play it from top to bottom or bottom to top. So leading into the open, before the market opened, as always, people ask me, Jimmy, what are you more interested in? Well, I'm more interested in puts for no other reason other than SPY spent 4 hours trending down in pre-market. Now, I don't know if it's going to bottom out here or continue to drop. What I do know is that at the time, we're clearly moving down. We happen to find a level of support, in which case you don't want to buy puts on support. But if we got a clear resistance, that might allow us to get in and move down to that support again, well, guess what? Why can't you play that? I'm playing with the momentum of the market, and we cannot ignore this. I had this on my chart, and it looks something like this. Literally, it printed a massive red candle that fell right out of the bottom of my screen. I looked at that as heavy momentum to the downside, and I believed that Qs, and they didn't do it, I believed that the Qs were going to break this support. I was hoping they would. So I took the trade because Qs were stuck at this little mini resistance with a wick on top, no problem. I saw ADD and I figured, hey, Qs are eventually going to catch up and go with the momentum or the move of ADD. It didn't. It did not. Because of that, SPY only moved down to the support we knew about in advance. We hoped it was going to move lower. It didn't. Qs held support and it bounced us up in the upward direction. Shortly thereafter, ADD started to make its trend to the upside as well. So this move or this massive sell-off in the morning on the small caps was very short-lived. Okay, but it gave us enough momentum to get from resistance to support. This was anywhere from a 20 to 55, 60% trade, depending on when you got in. Okay? Likewise, the other scenario was if you don't feel comfortable buying calls or puts at resistance, if Qs are on support, SPY hits that line down there, that's an opportunity to get into calls, right? The beauty of either one of those trades is that you're getting in at proven levels that if you get into puts here and it closes above that line, you could keep your stops very tight. Likewise, if you get into calls down here and we close below support here, this little guy, this green guy here, you stop out of the trade. Even more important is if you don't feel comfortable trading the open, don't do anything. We're not here to teach you how to trade like somebody else. We're trying to teach you how to read price action, how to spot trends, patterns, not patterns, but like channels and things like that. Use that to your advantage. If you don't like those things, don't trade those things. If you prefer to wait, and it's almost always better to wait some time for the market to pick a direction, to develop some levels of support and resistance before you take your first trade. I'm not denying that at all. I used to have a 10-minute no trade rule. And the reasons that I don't have it anymore are several. Number one, my account is big enough for me to play risky. I'm okay with being risky with my money. But every trade that I take is based off of reasonable explanation. You may not agree with it, but that's okay. It's not your trade, so it doesn't matter if you agree with it or not. But I will always articulate why I do what I'm about to do before I do it. You either get on board with that feeling or you don't. If you do, maybe you take the same trade, as many people did this morning. If you don't, then you don't take the trade. You've lost nothing. You've gained nothing. There's nothing wrong with that. You must be comfortable in what it is that you're doing. That's why it is more important for me to teach you how to stand on your own 2 feet than it is to follow somebody else's trades. Because I can make a trade suggestion that would work for me as long as I execute it the way I plan it. But you can quickly make my trade into your trade because you ignore the same rules that I have in place for my trade. I watch it happen every day. So the fact of the matter is, you need to only be taking trades that you are comfortable taking, not somebody else is comfortable taking. So we had people play puts at the open and made money. We also had people play puts at the open, hold it too long, and lose money. We had people not play puts at the open, buy calls on support, and made money. Either way, the trade worked if traded properly. And we talked about the proper way to take that trade before the market opened. So play the trades only if you're comfortable, and if you do take them, trade the plan. If your plan is to get to a support level and hold your puts through it, then you have to face the possibility of support holding and you lose. If you're conservative, you wouldn't have taken this trade at all. If you're aggressive on your entry and conservative on your exits, you would have gotten into puts here, you would have gotten out of puts here. If you have a call bias, you're going to buy off support, hoping that it goes up. If you have a put bias, you're buying puts every time it hits resistance. But if you're comfortable doing that, you do you. Okay? The important part is that everything we talk about, everything we teach is based on charts, not feelings. It is undeniable that there was a channel here. It didn't stay in the channel for long. You don't have to play the channel if you don't trust channels, but the reasoning behind that suggestion was exactly that on either side of it. You enter here, you exit at the bottom of the channel. You enter on the bottom of the channel, you exit at the top of the channel. It's too fast for you to play both, so pick your poison. Okay? Now, we start to trend up, as did the Qs. Okay, ADD, a couple minutes later, also started to trend up. So we have confluence in the market. We are trying to buy up, not just on ADD, not just on SPY, but also on the Qs. Great. As we move up, this was a janky morning. This was a tough morning to play, but we did try to wait for all of the reasons to take the trades that we took. This one here. We're coming off of a lower high on SPY, and I believe also on Qs, right? Guys, lower highs, because people are naturally asking, Jimmy, would you buy calls off the pink line? No, I wouldn't. Well, why wouldn't you, Jimmy? Because we're coming off of lower highs on SPY and on Qs. It doesn't mean you have to buy puts. But it simply means I wouldn't buy calls on this support because it's likely to fail, not hold. Okay, this we announced as a counter trend trade, so please be careful. You're going to want to take your profits at the first support below the one that you're expecting to fail. So our entry was here based off a lower high on the Qs and a lower high on SPY. Our exit was when the Qs hit their very next support down, which happened to coincide with a SPY support. Again, 2-minute trades. The reason that this particular video is called Morning Quickies is because there's not a trade on this chart that we took that lasted more. The longest one I think was 11 minutes. And the last 3 that we talked about today paid big. All right, and we'll talk about those here in just a second. So the reason for entry was here not because it's an uptrend. The reason it's a counter trend trade is because it's an uptrend. We're coming off lower highs. We're looking for a quick move to break support down to the next support. Easy peasy lemon squeezy. Does it work 100% of the time? No, but guess what? No trade plan works 100% of the time. No strategy works 100% of the time, ever. But this works often enough to consider. Likewise, over here at this point, because we're trending up, we're interested in playing calls. We want to play calls. We just need to find the right reasons to take the calls. Okay? We got a resistance here, resistance on SPY here. Okay? We want to make sure Qs are taking out resistance, which in this case, guys, we are trending up. ADD is still trending up. If we can break through this resistance or this lower high to our left, I could see the Qs moving up to their next target high, whether it's the blue line or beyond. We don't know. We'll never know. You can't know. So whether it's Qs you want to get out on or SPY you want to get out on, either way, we broke resistances on both SPY and Qs during an uptrend. We're looking for the move to continue up to the next line of resistance. If you're taking your entries because of the Qs, take your exits because of the Qs. Okay, so at 10:06, we were exiting the trade potentially right here. You could have squeezed a little bit more out of it here if you were waiting for the blue line on SPY. Either way, we got within 5 cents of it. And then we started to develop the red box of death. Now, this did not exist here until after this trifecta of touches that we failed, okay? We call it the red box of death. It's really basically a supply zone. Now, I don't trade or plot supply and demand zones, but I could see where they exist based on price action, okay? Calls became less and less comfortable to me the more times I watch Qs get into this area and fail miserably to stay up there, okay? So it became less likely that I was going to buy calls because of this zone. I wanted to make sure the Qs could close outside of it and stay outside of it before I was comfortable taking calls anymore. Period. End of story. There are occasions later in the day where we did find an excellent call to take, but there was the right setup for it. Okay, we were far away from that zone. We were bouncing off support or breaking resistances, and we'll get into that in a minute. So the question is, what do you do with something like this? Well, there's a couple of opportunities. You can either take your calls and get out of them when we come near this area, or consider buying puts in a counter trend trade as your entry area. Okay? Now, it's at this time right here where we're talking about, man, Jimmy, Q's just closed above resistance there. What about puts or calls now? And I said, I don't like the calls because of what happened here. I don't like the wicks on the tops of these candles. I don't like the wick on this green candle. I certainly don't like the wick on this candle. And it's at that moment that I said, I'm actually more inclined to play puts. It's a counter trend trade. If we get outside of this red box to the upside, I'll get out. Otherwise, I'm looking for this move to come down to the pink line right here. Okay? I called this one out before we even took the trade. Minutes before. Explaining everything and why. I am aware it's a counter trend trade. I would love to see the Qs below this area here. This support, because if it gets through there, I believe we get to the pink line, clear as day, said it out loud several times, and if we get below the pink line, we're likely to move straight down to the orange line. Okay? It did all of those things. But Jimmy, why didn't you get out of your trade when Qs hit the pink line? Well, I'm glad you asked that. And the reason is because at that time, where's my NVIDIA chart? If you take a look at NVIDIA at that time, where are you at? Here you are. We were having a hell of a sell-off on NVIDIA, and I'm thinking to myself, man, maybe somebody out there knows something that the Qs aren't aware of yet or don't know, but that's a hell of a lot of momentum on NVIDIA. Guys, I'm going to hold this trade a little longer because NVIDIA looks like it might have something to say about Qs continuing down from here. Qs continued on down, got through the next two levels of support and straight down to the final one, which is what we were hoping to get to. So at 10:30, 10:29, we exited the trade on SPY. This right here was a 55.5% move. Okay? Depending on when you got in. If you got in up in the red box, it was more than that. If you got in because we closed below this, it was a little less than that. But either way, that was a beautiful move to the downside. Everything talked about in advance and why we were going to take it or consider it. Okay? I told everybody, if Qs cross this line, I am going into puts. Once we got in it, we saw the momentum of NVIDIA. We stayed in it and maximized the returns on that trade. Everything was based off of support and resistance, and it just worked wonderfully. We bounced off that support. We moved back up. Again, choppy morning. Once again, another opportunity at 11:06. Now, I was done for the day. I'd only taken 2 trades today. I took the opening put. I took this one right here. For me, I was done, but I missed the 2, maybe 3 best trades that we called out later. Okay, I'm an impatient person. If I was more patient, I'd probably do much better financially in these markets, right? But I'm not, and it is what it is. Here, we were talking about the idea, once again, Qs coming off of lower highs, here, here, here. I'm expecting support to fail. If you don't feel it, you don't trade it. Where do we expect it to go? To the next support down. Okay. If there are reasons to stay in this trade, which we had said, I even had an alert set on this line down here. You can still see it right here. I said, guys, if we're getting into this trade here, I could see this thing coming down to, on the Qs, 478.33. Now, why that one? I'll tell you why that one. Because it's the support of the day for the Qs. Remember in the morning when we couldn't get lower? That is the line that stopped it from moving lower. So there was no suggestion to hold on to that trade longer, in my opinion. So guys, if we get down to that, I would take my profits. Okay? I'm not in this trade. I got nothing to gain. But I am trying to help people stay in their trades longer and understand why they should consider taking them. What cues to look for to get into these trades maybe a couple minutes earlier than you otherwise would. If you're trading indicators, you can't do this because indicators are lagging by minutes. Minutes in a case like this equals a lot of money. This trade only lasted minutes. Okay, you're talking about getting into a trade at 11:04 and getting out of it at 11:11. Okay, that's 6 minutes. To make 60%. If you get into this late or you wait for support to break or something like that, you got in on support and you left half the trade on the table. But Jimmy, how do you spot these things? Well, again, lower highs. And at this point, we had established that the Qs was driving the market. Lower highs typically result in broken supports. Again, you do not have to take puts, but use that information to stay out of calls. Likewise, if we're putting in higher lows, you don't want to buy puts at resistance because that resistance is more likely to fail, not hold. Okay? I'll show you a perfect example of that here in just a moment. So, this ended up being a massive move to the downside. Beautiful trade once again. Now, here comes the cleanest trade of the entire day. I was explaining to somebody who was asking me, Jimmy, how do you know what to look for to get into these trades as quick and as soon as you do? And that's when we were talking about trusting the chart and not what we want. Okay? Our emotions will make us and tell us to do things that we have zero control over the stock market. You have to accept that, right? But our emotions and our feelings will make us think that if we feel those things enough and we will it enough, that the market is going to bend to our wants and needs. That's just ridiculous. So unfortunately, that's what causes so many problems for so many traders, right? It's a fact. It is what it is. That's what makes trading so hard, is the emotional side of it. Now, swing trading and investing doesn't have much to do with emotions because you're just putting your money into something that traditionally goes up. And I'm not suggesting that the market is going to crash and burn. And even if it does, it will recover as it always has. But we're not long-term investors. We're trying to make the 10% that a long-term investor is putting their money away for each year in minutes. We're day trading. So we need to use the chart as our map to navigate these trades, not our feelings. When we let feelings take control of our trades, we become irrational because our wants, needs, desires, greeds will outweigh your ability to see and accept what you're watching. And we know that we're going through this because, and myself included, we will hold and hope plenty of times. It sucks. Sometimes we get lucky and hold and hope and works for us. But way too much damage is done when we do that, even if the trade ends up winning. If you hold and hope on a trade that wins, you start to tell yourself, okay, I know I'm in a losing trade now, but the last time I did this, I held and hoped and I got paid for doing so. That's a big damaging thing. Or you hold and hope and you lose, right? Sometimes that loss comes at a catastrophic level because you're playing position sizes too big in relation to your account. Catastrophic loss, blowing up your account. Okay? Or you've done so much damage to your account, you've got very little buying power left that you're now using 100% of your account to take trades in the future. Why? Because you need to make more money. So you have to play bigger position sizes. Guys, this entire thing will implode on you because of your emotions. It's not the market makers trying to screw you. It's not, CEOs. It's not corporate greed. It's not the news. It's not Putin. It's not any of this stuff. The market is going to do what the market does. You need to learn how to play nice with it. And when you do, it will reward you for doing so. It wants to be your friend. But we are constantly doing things to make it bend to our needs. And that's a battle you're never going to win. So, while we were talking about trading the chart and not based on emotion, we were talking about after a move like this to the downside that a bunch of people made money on, we were talking, and at this moment I said, here's a perfect example. As we move up to this line of resistance, statistically speaking, we break out of this to the upside. So if you're thinking puts because we're moving down or whatever, you might look at Qs and say, yeah, but Jimmy, look at the Qs are trending down and blah, blah. Again, I'm not arguing with you with how you feel. I'm debating the fact that I don't care how you feel. This typically works out to break up, not down. And if you want to wait for confirmation of that to be so before you take the trade, well, here is your candle close above resistance coming off of higher lows. And guess what? At the same time, the Qs were coming off higher lows as well. What about the pink line, Jimmy? Well, we just discussed the idea that resistances during higher lows are likely to fail more so than not. So if you want to get into this trade aggressively, you used SPY breaking resistance, use the fact that Qs are putting in higher lows. You got to be willing to say, I'm trusting statistics. It's going to go high because it tells us it should. And then the follow-up was, before this even happens, if you guys do take these calls, I certainly wouldn't hold them through this red box up here, the red box of death. Look at what it's done. Why not, Jimmy? I don't know. Let's look back in the past. What has happened every time we got into that? But Jimmy, this time it might be different. And you're absolutely right. So if you think this time it's going to be different, which I'm all for, I hope it's going to be different, then I would suggest that when we get close to that box, you tighten up your stop loss so that if it does what it's done 100% of the time that we got near it, you're protected from yourself. Not from the market makers, not from whatever, your trading platform, whatever excuse you want to use. Protect yourself from yourself with a stop loss. If greed is going to be the thing that you're after or the thing that ails you, which traders fail to greed all the time. It's okay to be greedy if you protect yourself in case greed doesn't work out for you. Move your stops up. You don't have to get out of the trade. Move your stops up. The problem is we don't know how violent, if at all, the rejection of that level is going to be. It might be a slow trickle-down effect. It might be a nasty return off of that area, like this was. Okay, or it might do something like this, where you have plenty of time to wait and see if we're going to continue to push up from here. But even if you held through this and said, I'm going to hold this, we're going to go to the next line, when we didn't, coming off of a lower high, I would say, guys, this is a lower high. If you're still holding on to those calls, you might want to consider taking your profits. Likewise, we come down to support, it holds, lower high, it breaks. Didn't break far, didn't go low, until a little bit later, but nonetheless, you gave up what was great profit here, hoping for more. Now you have less profit here. Now you're hoping to get back to here. The next move up tells you we're not likely to get back there. Now you're making less than you were here and here. Where do you draw the line? Where do you say to yourself, damn, how far am I going to let this pull back, hoping that it gets back to where we once were? That's a dangerous question, especially if you don't know the answer in advance. Because I've watched more people, including myself, do exactly this. We get up. Our trade plan was to get out when we get to the red box. We choose to ignore the trade plan. We hold for more. You get this nice pop up. You see a great big green number and you say, holy smokes, I'm up 75% on this. This is amazing. I'm going to get to 100. Fine. It pulls back. You're still pretty excited because it's showing a pullback to support and we're going to go up from here. Fine. But you know what you haven't forgotten? You haven't forgotten how much you were once up. But you're not panicking yet. But as that number diminishes, you start to hope that it gets back to what it once was. That hope is going to drive you to hold this trade even longer. As it gets deeper and deeper, less and less green, you start wondering, how bad did I just screw up? If I would have just taken my profits when we got here, I would have been comfortable with it. I would have been happy. I would have made money. Now I'm stuck in a spot wondering how long I should hold this, hoping that it gets back to what it once was, its former glory. Well, in this case, it never did for the rest of the day. I'll bet you that there's somebody out there who was in those calls that held them through the entire day and ended up losing completely all profits on that trade. Bet you. It makes me sad. I've done it, and I've watched other people do it all over the place. But this is why we must know what we're getting into, know what we're going to do after we get into it, and respect the plan. But if you're not going to respect the plan, and we can make that change on the fly, we have all gotten into trades that were right because we wanted to, the perfect entry for the perfect reason. But then suddenly, when we start to see good numbers or bad numbers, the plan changes. Oh man, this is a great trade. I'm going to hold it for more. Or man, this didn't work out like I wanted to. This is really hurting. I'm going to hold it hoping it becomes less painful, right? It works both times, both ways. But if you let it go too far in one direction or the other, the wheels come off. Trade plan is out the window, and you better reassess with a stop loss or a take profit. Period. Protect yourself from yourself because you will lose to your weaknesses. If you want to learn how to develop amazing discipline, realize where your weaknesses are as a trader and do everything you can to avoid facing those weaknesses, which is going to require you to be disciplined. Get out of your trade when you said you were going to get out of so that you don't have to face that weakness of, well, what do I do now? Guys, I do this for a living. I help people every day. Okay? I know what I feel when I get into my trades, and I know you guys feel the same things. I've been fortunate enough to put those feelings aside and not affect my trades 95% of the time. Okay? I do hold and hope sometimes. I'm not going to lie. Okay? I deviate from my trade plan from time to time. Not going to lie. But the majority of my trades are very concise, very specific, and very much followed to the T. I'm getting in here. I'm getting out there. This is why I'm getting in here. This is why I'm going to get out there. There is no but what ifs. But what if it breaks through that line of resistance, Jimmy, and you could make more money? I don't care, because the minute that I allow that to happen, I also open myself up in the door where all my weaknesses exist to allow them to come out and potentially plague my trade. I don't want to face my weaknesses. I'd rather follow my plan, be happy with what I've done, walk away with money in my pocket and a smile on my face. I don't want to feel dirty for doing what I did. I don't want to feel like I got lucky. I don't want to feel like I'm gambling, because that makes me uncomfortable, and I don't want to trade uncomfortably, and neither should you. Okay? Now, the next trade that we found, or the last trade, or sorry, second to last trade we found, was this wedge break up. This ended up being a massive move to the upside. And depending on when you got in, you're talking about 60 to 100% return. Just being patient, just following the statistics. Guarantee to win? Never. Odds say it's going to go up. How far? We'll never know that either. But we'll take out when we get to a point where we knew historically we had a hard time moving higher. I don't want to fight against the sellers. I want to know where they exist. I want to avoid that fight. I want to walk around it. Or I want to give up before I get into the fight. That's exactly what I was suggesting people do. Again, it was not in this trade. I was already done for the day, and I missed the 3 best trades of the day. I'm not mad. I made good money today. But I could have made much better and more comfortable money had I just waited a little longer. Okay? Likewise, and this was the final trade we talked about because it was right before I went to lunch. I said, guys, I was being asked, Jimmy, would you buy puts here? This looks like a bull flag. And I said, is this a trick question? He asked if I would buy calls here. And I said, is this a trick question? I thought he was joking with me. And the reason I asked that question is because we're sitting here for, 30 minutes trading up against a resistance that we're clearly having a very difficult time going through. And I'm wondering, why calls here? I mean, if you're going to take calls, at least wait for confirmation of resistance is being broken. Make sure Qs are above this madness. I said, but quite frankly, not only would I not be interested in calls unless very specific things took place, I'd be likely to get into puts if SPY can get below 544.97 and Qs are below 480.25. That's what would get me into puts at this point if I was going to take a trade. Well, lo and behold, those two things happen to line up with each other right here at 1238. Qs, 1238 was below that line. Let's go. Let's go. Where are we going? I don't know. I wasn't here to commentate anymore because I went for lunch. But you guys know, trust your lines of support. Pink lines, watch for lower highs. If you have lower highs, expect support to fail, not hold. So maybe that keeps you in your trades longer. Maybe you're hoping to get down to this line down here. Maybe you're willing to take your profits when we get to this line here. I don't know. You do you. But this was a hell of a move to the downside based on very specific reasoning. After this, guys, that trade was the last one we talked about. I went to lunch, I came back from lunch, and then we watched the market move sideways until 350. Now, I don't promote trading this late in the day. It's not my thing. But again, as discussed in yesterday's video, you take a look at the 350 candle. If it closes green, SPY likes to close above that line into the close. This was one hell of a move to the upside. Massive move to the upside, but guess what didn't fail? Look at the red area of death. Look at what happened when we got to it. That wall of sellers stepped up once again as they had all day long. So if you happen to be in calls for that move up, SPY moved up, Qs moved up, ADD, rocket shipped up. Okay, that was an A+ setup. Too late in the day for me. I don't do trades that late in the day, but everything was there confluence-wise. Even the futures. Even the futures were rocket shipping up to their resistance line here. Look at that. Okay? This stuff is all over the place, guys. It's all over the place. You just got to know what to look for and trust the chart. Think different, win different. We got to do everything that the 95% of day traders keep not doing, meaning don't do what they do and expect different results. 95% of day traders fail. And the reason they fail is because they're emotional. or they're just winging it. There are ways to stack the probabilities in your favor, guys. There are ways to do it. I know it's true because I do it. And I help other people do it. There is no shortage of people in our community that have learned to trust the chart and saw immediately results, positive results for doing so. Almost every day, somebody says, took me forever to accept it, but man, I'm following these levels and it's working for me. Yeah. And that's awesome. Now stick to it. It takes time. It takes trusting something that you have no control over. But the minute you realize you have no control over it, then you'll learn to accept, to take what it has to offer. Okay? So with that, we're going to wrap it up. Sorry this video was a little long, guys. But today was an important day. There was great trades to be had. There was plenty of times to not trade anything. There was good setups. You know, nothing works 100% of the time. But today was a great day for charting, for respecting levels, for looking for confluence and all of that stuff. Okay. It was a difficult day for a lot of people to trade. And I think that difficulty came in the majority of the day was sideways, craptastic lack of movement. Okay. It really was. The best moves of the day today were prior to lunchtime, which is specifically why I don't trade after lunchtime. Okay. You'll have great moves sometimes after lunch, but again, my job, my future does not involve me sitting in front of this computer 8 hours every day to try and trade something when I can make the same amount of money comfortably and be done, freeing up a whole bunch of my time in just a few, just an hour of every day. But with that said, I hope you guys got some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, well, there's a link down below. We'd love to have you. There's 3.5 days left of our quarterly annual discount. If you're interested in joining our community for the year, this is the cheapest it will ever be. It's $50 a month, or the equivalent of, okay, normally we charge $100 a month. With the discount code, it's $50 a month. If you intend on being here for at least 6 months, it's well worth the money. If you're still not sure whether this is something that you want to do or a community you want to be in for a year, by all means, use the free trial. Go for month to month. Okay, I offer this discount every quarter, so you're not going to miss out on it happening again. Just a food for thought. All right, and with that, I hope you all had a fantastic day. We're going to wrap it up. Till tomorrow, I love you guys.